Thanks for joining me in my market report. My name is Mike, and my market report is on mortgage rates. We kind of like to get into what drives them on a daily basis, what goes into impacting, whether it's economic data, if it's headline news, what kind goes into if they're going up or down or sideways. Uh, just like stocks, rates do change on a daily basis. So we kind of like to get this report out to people. We don't feel like there's enough information out there for consumers to make informed decisions. So we kind of like to try to help you guys out here. A little bit about myself is I am a loan officer. I do work with the national lender. So please feel free to reach out if you have any questions about mortgage rates or mortgage programs or process or anything along that line. If you're looking to refinance or purchase, we're here. We can help you out with that as well. So please feel free to reach out. In the meantime, why don't we go ahead and start with our economic report that's influencing the markets today. Today we just basically got the reports from the IHS market PMI report. The first one is on the services sector. So anything above 50 is considered expansion or optimism. And as you can see here, back in June, it was at 64.6, which is a good number. Forecast calling for a slight dip down to 64.8, or I'm sorry, not downwards, upwards to 64.8. However, it went downwards a little bit in July here. And a lot of it, of course, is the new variant going around, concerns about possibly more lockdowns, more restrictions coming in for services. Also, services are also having a lot of people having problems with getting people to come back to work. So there's a lot of factors that go into this. And then we also got manufacturing, which is doing a little bit better, as you can see. So back in June, it was at 62.1. Forecast supposed to be in that same range at 62. However, it went upwards slightly to 63.1. So services kind of getting hit a little harder than manufacturing in July here. And let's jump ahead. Let's take a look at the headline news. Stocks are up. They're continuing the trend. Monday was a big sell-off because there's concerns about the Delta variant that perhaps they have peaked, and so they kind of did a big sell-off. So, but since then they've been doing the big, the mantra buy on the dip, and they've been continuing that all week long. Now we do got more decent Q2 corporate earnings reports coming out here. But they're also kind of looking ahead to next week. We got some of the big tech companies releasing their Q2 earnings reports next week, and then we also have the Fed meeting. The FOMC will be kicking in next week as well. So they're kind of got one eye looking what we currently at today, but they're also got the other eye looking at next week, what everything ahead there. So, and try and position themselves into a good place before we get to next week. Let's jump ahead, take a look, see what rates are doing today. Rates are up about 6 basis points. However, you can see here we started the morning off much lower. So some lenders, early lenders that priced out earlier probably repriced for the worse. However, since then we have improved and we're back to the same level as yesterday. It's slightly better than yesterday at +6. So we should be pretty close. Now those priced out earlier probably did a reprice for the better. Those who came out with the later rate sheets probably already priced in rates pretty similar to what we saw yesterday at yesterday's close. So but this is something we'll have to kind of watch for. As we saw here, we closed downwards, we opened up lower and then rose up. Same thing here. And then if you look at yields really haven't moved anywhere. So we don't got a whole lot of room for mortgage-backed securities to be drifting too far off. And we're right about the 1.29 range, just under that at 1.2888 right now. So again, good news. Rates are still pretty good right now. We're still seeing some pretty good mortgage rates right now. And if you've got some questions or anything we do for you guys, please feel free to reach out. If you guys like these videos, I would greatly appreciate if you can smash that like button. It certainly helps out our channel. And your views are we're very happy to have you guys here, and we appreciate you guys. And we look forward to see you guys on Monday's video. Thanks so much for watching. Bye-bye.